And welcome to Avian Midday Market Watch. Our guest today is Kelvin Wong. He's the market strategist at CMC Markets. Kelvin, great to have you on the show.
Thank you, Brian.
Now, Kelvin, before we get your insights, let's take a look at how markets are performing around the region. Now, we've got pretty mixed bag. We've got the Nikkei, which is slightly up at 0.02% at 26,823.97. Shanghai Composite is at 3,380.1, up 0.24%. The Hang Seng is down 0.8% at 26,375.97. ASX 200 is down 0.46% at 6,697.7. And the Kospi is up 0.23% at 2,761.85. Closer to home, we've got Bursa Malaysia trading at 1,653.51. It's up 0.42%. And SGX is trading at 2,829.86, down slightly, 0.46%. Now, Kelvin, what's your view on the current state of markets now?
Because if I look at things from a broader perspective, right, yesterday lackluster performance on the US market is primarily driven by more of a kind of a sell-off on the info technology space, especially those FANG stocks plus Microsoft that led to the Nasdaq 100 to down by 2%. But however, like this primarily driven more on liquidity perspective as well as short-term trading activities, rather than what you see the kind of a long-term fund manager hard money under allocation of what you call it global stocks. So what positive over here is that despite this underperformance of Nasdaq 100, it actually didn't have a kind of a very widespread negative impact on the broader Asian stock market, as we could see right now. Even the China CSI 300 is actually plus 2.4%. And even Kospi is plus 0.2%. So what's actually impacting the worst right now in Asia will be the Hang Seng Technology Index, which is very similar to the Nasdaq 100. That comprises a lot of semiconductor companies, as well as those China mega big techs like Alibaba and JD.com. So that one is down at 1.18%, which is tracking very close to the Nasdaq 100. So based on what I see in this, the performance overnight in US, it doesn't kind of prelude to a major sell-off or major bearish reversal for global stocks, but rather more of a kind of a one-off short-term trading kind of a environment. And nevertheless, we're talking about from a multi-week to multi-month perspective, the broader uptrend remains intact for global stocks.
Okay, then how about crude oil prices? Because they took a bit of a beating after a bearish EIA crude oil inventory. Now,
yes,
the headline draw is 15.2 million barrels. It was the biggest increase in stockpiles since April now, which is essentially far more than market consensus. So what's your view on oil markets and the inventory build-up? Is it a blip or a trend?
Okay, so from what I see, I'm pretty much more focused on the price action after such negative release. So if you look at in the past, usually such negative release, you see crude oil futures, the LCO futures, were actually tumbled by more than 1%. But what surprisingly is the price action of the light crude oil futures, they actually reacted quite positively to this news. They only down 0.18% and even managed to hold above the key medium-term support at 43.30. Yesterday, US session, it closed at 45.52 US dollar per barrel. So for what I'm looking at from a technical analysis perspective, is the medium-term uptrend is still pretty much intact for light crude oil futures, potentially heading towards the next resistance at $50.50 per barrel. So one of the fundamental catalysts or fundamental news flow that is supporting such price action is market actually is now looking ahead of a slowly increase in consumer demand or industrial demand for oil price, given that the next 1 to 3 months outlook will be relatively more positive due to this more and more, we call it vaccine news, COVID-19 vaccine news, positive development. So in fact, market is actually now expecting another positive news development to actually take shape later in the US time zone, later tonight. I mean, tonight will be Asia time zone. So they are actually waiting for the US authority, the FDA, to give the green light for this emergency authorization on the Pfizer COVID-19 vaccine. So that could be the positive driver that is kind of a positive catalyst that is supporting the oil prices right now, despite the negative inventory number yesterday.
Now, moving on to gold. Now, gold
Sure.
prices obviously are retreating inversely with the dollar. What's your view for gold in 2021?
Okay, the problem with gold right now, they're actually fighting two forces, okay, two fundamental forces. One fundamental forces is the rising US Treasury yield curve, especially on those longer dated bonds. We're talking about 10 years and above, that are inching slowly higher. So what it means that gold does not give you any interest income if you hold gold. So that actually increased the opportunity cost of holding gold, hence putting a cap on the prices of gold, all right? But on the other hand, if you look at the perspective where economy always starts to pick up, so there is actually a potential release of pent-up demand, especially from the demand side. And also we're talking about potentially there might be some global supply shock that is still in place, because we never know. This China-US trade war thing is still there. Okay, it's still pretty much intact, that investors or traders going to look out for. So what I'm seeing that actually now gold prices is fighting these two conflicting. Negative side will be the US Treasury yield curve that's rising. On the positive side, it will be supply chain shock, pent-up demand that could actually drive up inflationary expectation. So that's actually positive for gold. So what I see for gold in the 1 to 3 months in 2021 will be more of a sideways kind of a trading range between 1965 and 1765 for gold.
Okay. And where do you see movement in volatility for currency markets at the moment? And obviously, where can you make some profitable trades? One of the things which is volatile is obviously the pound.
All right. Yeah. Actually, I can't really advise on the direct directional trade, but I'll still give a bit of outlook or my perspective. So definitely, you know that this coming week or 2 weeks from now, there's 3 main risk events. Okay, in fact, the first risk event will be today, ECB, which will be not really a main event, market driver, because ECB more or less the market is really expecting them to actually do more, which is very priced in. So what not really priced in is the Fed meeting, which is next week on December 16.
16, right?
So that one, correct. So that one, people are just market participants some of them are actually expecting for the Fed to do something more bolder, which is to do a kind of yield curve control, to control the current rising pace of this US Treasury, the 10-year, which is now slowly inching toward 1%. Okay, then on the other hand, the next volatile or the key risk event will be Brexit. Right? So will they continue to kick the can down the road, or will there be a possibility of a skinny Brexit deal before year end? Okay, that one is more on political brinkmanship, which I do not have the expert to advise or to give a view on that. But definitely, as this kind of news flow start to hit the news wire, especially for the Brexit side, and especially to the build up towards the Federal Reserve meeting, definitely there will be volatility, especially on the sterling pair. Then, for what I look at it over here is that if you look at the current situation right now, the global recovery story is still pretty much intact. Number one will be, as we discussed earlier, will be more positive vaccine, COVID-19 vaccine news development that will start to take shape in the next few days or the next 1 or 2 weeks. So that could actually be very much supportive of growth proxy currency like the Aussie dollar. Okay, so if we will pair up in the cross pair, that one that is likely to see a bit of downside will be the sterling. So I'm pretty much, in terms of very short-term tactical play,
so you're short on the sterling?
I will have a bearish bias, but I tend to pair it up with a currency that is stronger right now with the Aussie. So that's why I'm looking at the sterling Aussie pair. Okay. So very interesting, this sterling Aussie pair, right? It has a kind of very short-term bearish bias from a technical perspective below this 1.8060 resistance, looking for a potential slide towards this support at 1.770 to 1.7530. So that is the kind of a tactical play that I'm looking at right now, to actually pair up with the sterling. Yes, it can be potentially weaker due to this potentially negative news flow from the Brexit side of the story in these coming days. But on the Aussie side, the Aussie tends to be more positive because given itself as a growth proxy on this global recovery story triggered by this vaccine news optimism. So I'm looking for a kind of a play between sterling versus the Aussie. Yeah.
Kelvin, interesting thoughts. Thank you very
Sure.
much for your insights. We've been speaking
Thank
to
you.
Kelvin Wong, market strategist at CMC Markets on BizTech's ASEAN Market Watch. I'm Brian Fernandez. Check